Hello students, welcome to Account-Wise Academy. This is Latha Venkateshwaran. Today we are going to learn about Annuity Method of Depreciation. Annuity Method of Depreciation. Opportunity Cost. Opportunity cost is the cost you forego on buying the asset. Suppose you have 50,000 rupees. With that, you are buying a machinery. If you have not bought the machinery, you would have invested it somewhere and you would have earned interest on that. So, this interest which you are foregoing by buying this machinery is the opportunity cost. See here, investing in an asset has an opportunity cost as the same funds could have earned interest elsewhere. Okay. Traditional depreciation methods like fixed installment and diminishing balance generally ignore this opportunity cost. Straight line method and return down value method does not consider the opportunity cost. See, I have uploaded videos on straight line method and WDV method, that is the return down value method, from the exam point of view and from the revision point of view also. You can go through those videos for a better understanding. Okay. Coming to annuity method of depreciation, leasehold property. A common scenario is leasehold property. Annuity method of depreciation is always used when you buy an asset on lease, where a lump sum payment is paid upfront. Here, under annuity method of depreciation, you will be, or when you take an asset under lease, you will make the payment upfront. That is, you will make the payment in the beginning. Interest on advance payment. In such cases, the loss of interest, that is opportunity cost, and the upfront payment, that is paying in the beginning, should be considered as the part of the asset's cost. So the interest that you have lost will be added to the asset. Asset will be asset cost plus interest that you have lost. Next point is, this method accounts for both depreciation and lost interest on the initial investment. So it is going to consider both depreciation and the opportunity cost on the initial investment. Depreciation under the annuity method is typically higher than under other methods due to the inclusion of interest. Depreciation will be very high when compared to the traditional method of depreciation like straight line method and return down value method. Uniform depreciation. Despite varying interest cost each year, the annuity method results in a uniform annual depreciation charge. Only the interest cost will vary every year, but depreciation charge will remain the same for all the years, like the straight line method of depreciation. A lease account is used instead of standard depreciation account. We are going to open lease account and not a standard depreciation account under this method. Now let us learn how to use the annuity table if they ask in the exam. Okay. Annuity table will look like this. Amount required to write off rupee 1 by annuity method. The columns in the annuity table are years, 10% interest, 11% interest, 12% interest, 13%, 14, 15%. And first year, second year, third year, fifth year, like that years will be given. And the interest rates will be given for 10%, 11%, 12%, and so on. I'll explain this with an example. We have a lease for rupees 10,000 over 5 years. We will use the annuity method to calculate depreciation with a 12% interest rate. Okay, we have to look at the annuity factor for 5 years at 12% on the annuity table. What they have given, this period is for 5 years and the interest rate is for 12%. So we will match 5 years with the 12% interest rate. So when we go till the 12%, the interest or the annuity factor comes to 0.2774096. So we have to multiply 10,000 by 0.2774096. You get the annual depreciation as 2774, which will be uniform or which will be the same for the next 5 years. Okay. Usually they will give this factor in the question, but if at all if they have not given the factor and if they have given only the annuity table, then now you will be able to solve the question as you know how to see the annuity table. I am going to solve a question on annuity method of depreciation. A company acquires a lease costing rupees 1 lakh for a term of 5 years. You find the annuity table that in order to write off the lease on the annuity method at 13% per annum interest, the amount to be written off annually works out to be 0.2843145 for every rupee. Prepare the lease account for all the 5 years and show the annual charge to P&L account, that is profit and loss account, during each of these 5 years. As I have already told you, we don't open depreciation account of an asset. We open only lease account when there is annuity method of depreciation. See, this is the question and let us see step by step. A company acquires lease costing rupees 1 lakh. Here they have not used the word asset, they have used the word lease. Normally, when you buy an asset, the entry that you will pass is asset account debit. Since the asset value increases, it has to be debited. So you will debit asset. Amount is 1 lakh to bank. When the asset is bought, the bank balance decreases. When the asset value decreases, you will credit it. That is why you are crediting bank. The amount is 1 lakh. Right? When you buy an asset under lease method, asset will not be debited. Instead of that, lease will be debited. Now we are going to open lease account. Let us see how to do it. This is the lease account which we have opened. Okay, lease account is like any other ledger account. On the left side we have DR, on the right side we have CR. The columns on the left side, that is on the debit side, are date, particulars, LF amount. On the right side we have the columns of date, particulars, LF amount. The first entry is to be passed for acquiring the lease. The entry for acquiring the lease is lease account debit to bank. We are doing lease account. In the journal entry, opposite of lease account is bank. In the journal entry, we have credited bank. So in the ledger, we are going to debit bank to bank rupees 1 lakh. Under the date column, we have taken it as first year January 1. I'll explain you why. In the question, they have not mentioned anything about year or month or date. So we assume that the financial year is from Jan to December and we have bought the machinery on 1st January. That is why we have taken it as first year January 1. Next, the entry is to be passed for interest. Okay, interest is usually charged on the opening balance. Okay, here in the question, what is the opening balance? The opening balance is 1 lakh. And see the question, to write off the lease on the annuity method at 13% per annum interest. So that is the interest rate which we are going to take. Interest is usually charged at the end of the year. So we take December 31 and the entry for interest is lease account debit to interest. We don't take asset here. Since we have taken the asset on lease, we take only lease. So we are doing lease account. In the journal entry opposite of lease account is interest, which is credited. So in the ledger of lease account, we are going to debit interest to interest. Opening balance is what? 1 lakh. 1 lakh into 13% is 13,000. Next entry to be passed is for the depreciation. So depreciation is to be charged on the opening balance only, and it's going to be remaining the same for the next 4 years also, because annuity method is similar to the straight line method of depreciation. So the entry for depreciation is depreciation account debit Usually it is to assert. Now, since we are doing lease account, we are going to take it as lease account. Okay. Depreciation to be charged is 1 lakh into the annuity factor 0.283145. Multiply, you get 28,431. 28,431 is going to remain constant for the next 4 years also. Okay. Now, on seeing, we find out the debit balance total is more. So, we take the total on both the sides. 1 lakh plus 13,000 is 1 lakh 13,000 on both the sides. On deducting 1 lakh 13,000 from 28,431, you get 84,569. So, on December 31, by balance carried out, it is 84,569. See, I did not tell one thing. Depreciation will be charged at the end of the year only. So, we take the date as December 31. We have completed the lease account for the first year. Now we will do for the next 4 years because it is for the 5 years. Lease is for the 5 years. Okay, on December 31, we have written as by balance carried down 84,569. This will be brought down next year, second year, January 1, to balance brought down 84,569. Okay, interest is to be charged on December 31 on the opening balance. So the opening balance is 84,569 into 13% is 10,994 on the debit side. Similarly, depreciation has to be credited second year, December 31 by depreciation. It has to be the same as the first year, that is 1 lakh into 2.43145, that is 28,431. Now the balance of debit side is 95,563. That will be taken on both the sides because balance of debit side is more. On deducting 95,563 from 28,431, we get 67,131, which will be returned as December 31 by balance carried down. This is brought down next year, third year, January 1, to balance brought down 67,131. Interest on the debit side, December 31 to interest on the opening balance is 67,131 into 13% is 8727. On third year on the credit side, December 31 by depreciation is 28,431. On seeing debit side balance is more, 67,137 plus 8727 is 75,858. Taken on to the credit side also, on deducting saying 75,858 from 28,431, we get 47,427. December 31 by balance carried down as 47,427. Fourth year, January 1, it is brought down to balance brought down 47,427. Interest is to be calculated on 47,427. Debit side, December 31 to interest 47,427 into 13%. It is 6165. Similarly, fourth year, December 31 on the credit side is by depreciation 28,431. Debit side total is more, so we take 53,592 on both the sides. On deducting 53,592 from 28,431, it is 25,167. On the credit side, December 31 by balance carried down. This has to be brought down on fifth year, January 1, to balance brought down, it is 25,167, 161. On December 31, interest on the debit side is 2 interest on the opening balance is 25,161 into 13%, it is 3270. Fifth year, December 31, by depreciation, 1 lakh into 0.284345, 28,431, same. It is 28,431. When you add the debit side, you get 28,431. Similarly, credit side also 28,431. So the lease account is balanced. Always lease account will be balanced at the end of the life of the lease. Okay, that should be noted and it's very important. The next step is to prepare the statement showing the net effect on the P&L account. That is what they have asked in the question. And before that, I am going to tell you some points for a better understanding on how to do this statement. First, let us see. Depreciation is debited to the P&L account. We all know depreciation is going to be debited to the P&L account. Similarly, interest account will be credited to the P&L account. Thus, each year profit will have debit in respect of depreciation and credit in respect of interest. We all know that if there is a debit in the P&L account, it is going to reduce the profit. Similarly, if there is a credit in the P&L account, it is going to increase the profit. Okay, thus in effect, reduce a net charge debit to the P&L account to the level of interest credited. Your debit side or your profit and loss account, debit will be reduced to the level of the interest credited. You will understand when you see the statement. See, this is the statement we are going to prepare as asked in the question. Statement showing the amount chargeable to the P&L account. The columns to be opened are here: depreciation debited, interest to be credited, and net charge against profit. First year, depreciation debited is 28,431. That is uniform for all the 5 years. Interest credited is 13,000. On deducting depreciation debited from interest credited, it is 15,431. The net charge against profit. If at all, if we are using the traditional method of depreciation like straight line method or diminishing balance method, our profit would have reduced by 28,431 directly. But under annuity method, it has reduced only by 15,431. Second year, depreciation is same. Interest is 10,994. So the net effect on the profit is 17,437. Similarly, third year, 28,431, 8727, 19,704 is the net effect on the profit. Depreciation fourth year is 28,431. Interest credited is 6165. Net effect on profit is 22,266. Fifth year depreciation is 28,431. Interest credited is 3,270. And the net charge against profit is 25,161. Okay, you can see that the profit debit has increased gradually because the interest credited has reduced gradually. Okay, so the total is 1,42,155 for the depreciation, and interest credited is 42,156, and the net charge against profit is 1 lakh, which is equal to the cost of the lease. So if they ask in the question, you should get as the answer only the cost of the lease as the answer, then your answer is correct. Okay, this is the way you have to do the annuity method of depreciation when the question is asked under this method. With this, we are finishing the annuity method of depreciation.